Hey everyone, I wanted to go ahead and review the trading action on the SPY today. I'm going to be like your parents and nag at you that not every day is a day to buy in the market, and not every day is a day to go long on the market. And I wanted to share an analogy with you. If you have a hotshot basketball player breaks his leg, no doctor in their right mind is going to tell the athlete to go back onto the court the next day and do some layups. It's just not how it works. And there's a healing process once something is broken. For a broken leg, they're going to need to stabilize it, cast it so that it can rebuild the bone and heal. And once it's healed, maybe there's a period of time where you need to do some physical therapy to re-strengthen the muscles and the bone. The same thing with the stock market. When a stock or an ETF is showing signs of brokenness, of being broken, there's no rush to get back into that stock or that ETF. Yesterday, we had a confirmation of a head and shoulder pattern on the SPY. Now, there's no need to go back and rush in and buy the SPY. It takes time for that pattern to unfold. And as you know from other charts and other stocks, this process can take months. If we take a look at Baba's chart, we can see from this high to around this area, this is about 110 days. So this is where, this is where the leg is broken. This is where the leg is healing. And this is where the leg is exercising, getting stronger, ready to burst out. The SPY, it's the same thing. This is where, let me get back to there. This is where the leg is broken, okay? And this is where we start the healing process, but it's going to take time. And based on this pattern here, it's going to take time until it gets to the 192 or the 191 area. In the meantime, the athlete might feel better and it might go up a little bit, but ultimately it's still going to head down. Now, I've always mentioned to you guys in the past that when a trend line is broken, you will have a retest of that line. And that's the first thing we did this morning. As you can see here, we opened up and we rallied to the line and we got rejected. And the closing candle is what matters. And in this case, we closed below the previous candle's low. So we are clearly still in bearish mode, even though the volume is a little bit higher. And so the only way we can invalidate this bearish sentiment is, first of all, reach the price target, in which case we will reassess the situation. And second of all, we have to look for any kind of bullish reversal. And one of the key signals and the simplest signals when you look at a chart is to look for higher highs. That's a sign that prices are improving and they're rising. And that's when you want to get in. So will it take 10 days? Will it take 15 days? Will it take 30 days? We don't know. So unless you're a very nimble trader and you want to try and catch these short rallies, that's fine. But if you want to make it life easier on yourself and not stress too much, wait until the market heals itself, repairs itself, and then once it starts heading up, look for the setups. As a new trader, it's very difficult to sit out of the market. You probably came into the market because you made a big bundle on your first trade and you think that it's always going to be that way. Or you saw some of your friend made a killing in some kind of trade, and in one trade they tripled their money, and you want to do the same thing. But in reality, that first trade was beginner's luck, and it takes a lot of skill to be able to make money in the market. So please be patient and let the pattern unfold, and then at the right moment when the trade comes to you, you can go ahead and take the trade. Now, that's not to say we don't go up for a few days, but again, the main thing is we have to look for this higher high. Now, this high is actually pretty far from here, so we're going to expect, at least on a smaller, finer time frame, that will make highs and then go ahead and make a higher high. So if we take a look at the hourly chart here, you see here we haven't had a high yet, but today we put in a lower high. So this is a no-go here. This is a high. This is a lower high. Now, if we come back down here, we can expect a lower low and possibly a bigger lower low, and then we may make another higher high. So unless, at least on the hourly time frame, you start seeing higher high, that's the first indication that we would have a potential reversal in the market. But until then, you patiently sit and wait and watch the market. What do you do when the market is pulling back? Well, the most important thing you do is look at the stocks and observe which ones are holding up well, which ones have high relative strength, and which ones are forming bases. And when the market breaks out, you've already spotted your winners and you're ready to go. So that's the market cap. Please be patient and wait for the market to correct itself. Don't spend all your cash now. Save it for when the market is ready to go. That's when you make money. Right now, go to the beach, enjoy the spring break, enjoy the spring weather, read a book, watch a movie, and when the market turns, make some money. That's it. If you like this video, please click on the like button below. If you want to stay updated with my videos, please click on the subscribe button, and I will keep talking about the market, and I will also, when the time is right, show you setups that can bring you decent returns in a short time frame. So that's it. Thank you very much.